This video covers Mitsui Bussan's financial results for the second quarter of fiscal year 2026, covering the period from April to September 2025. Mitsui Co is Japan's general trading company and a member of the Mitsui Group, one of Japan's historical zaibatsu conglomerates. It is also one of the Sandai Shosha, the three big trading companies, alongside Itochu and Mitsubishi Corporation. The first half overview and the second half initiatives. In the first half, Mitsui achieved steady progress of 55% for both core operating cash flow (COCF) and profit, showing strong performance against its annual plan. Mitsui experienced only a limited direct impact from U.S. tariffs and recorded solid growth in base profit, driven by its middle game initiatives, which strengthen ongoing business operations. Mitsui also reinforced its long-term earnings base through carefully selected investments for growth, although it recorded an impairment related to narrowing down a development plan. For the second half, Mitsui has made an upward revision to its full-year forecast for both COCF and profit, aiming for even greater results. The company has now fully allocated its management resources and announced a 200 billion yen share repurchase, showing its commitment to flexible shareholder returns. Additionally, it is strengthening integrated risk management in response to geopolitical uncertainties and global financial conditions, while continuing to address remaining business challenges through improvement measures. The net income progress rate is 55%, and the annual forecast was revised upward. A new share buyback was also announced. This was a good result for the first half. In the first half of FY2026, both core operating cash flow (COCF) and profit made steady progress, each reaching 55% of the full-year business plan. COCF for the first half was 448.5 billion yen, down 16.7% from the previous year, while profit was 423.7 billion yen, up 2.9% year-on-year. Based on this strong performance, Mitsui revised its full-year forecast upward, now expecting COCF of 900 billion yen and profit of 820 billion yen. Mitsui also plans to maintain a total annual dividend of 115 yen per share and decided to conduct a 200 billion yen share repurchase between November 2025 and March 2026. Overall, Mitsui is progressing steadily toward its business targets, achieving strong profitability and enhancing shareholder returns. Progress against its fiscal year business plan and the full-year profit forecast. In the first half, total profit was 423.7 billion yen, representing 55% of the initial business plan of 770 billion yen. Based on strong performance in certain segments, Mitsui revised its full-year profit forecast up by 50 billion yen to 820 billion yen. Better than expected performance in mineral and metal resources, energy, and machinery and infrastructure drove the upward revision of the full-year profit forecast. Profit by segment for the first half of 2026 compared to the same period in 2025. Profit in the mineral and metal resources segment declined mainly due to lower metallurgical coal and iron ore prices. The energy segment increased its profit thanks to higher LNG-related and gas prices, although oil trading had a negative impact. Machinery and infrastructure saw a decrease affected by the absence of major asset sales and impairments in its mainstream business, partly offset by gains from the Firefly U.S. Space Company, IPO, and other investments. The chemicals segment improved due to valuation gains from ITC Antwerp, Belgium-based tank terminal company, and the absence of impairment losses. Iron and steel products achieved a slight increase supported by trading activities, though it lacked the benefit of previous asset sales. The lifestyle segment remains stable, with gains from asset sales offset by weaker coffee trading. Innovation and corporate development recorded higher profit mainly from fair value gains. Overall, total profit for the first half of fiscal 2026 increased slightly to 423.7 billion yen from performance in the Americas and U.S. business for the first half. Mitsui expects to achieve approximately 170 billion yen in profit from the Americas, with around 110 billion yen coming from the United States, which represents the largest portion of the regional total. Mitsui's operations are primarily domestic, covering industries such as automotive and trucks, natural gas, methanol production, food manufacturing, tank terminal operations, and steel processing. Export activities mainly involve liquefied natural gas, LNG, and grains. The company notes that its U.S. portfolio experienced limited direct impact from tariffs in the first half, and it views changes in global supply chains as an opportunity to expand and strengthen its trading functions. Overall, Mitsui's profitability in the Americas is driven largely by strong domestic operations in the United States, alongside its export business. Timing of earnings contributions from Mitsui's new projects and how they will support both near-term profits and long-term growth. Mitsui expects a higher base profit from projects already contributing to earnings, while continuing to execute new investments that will strengthen future earnings. In the past, Mitsui earned from major projects in energy, infrastructure and machinery in Asia, wellness-related businesses, and investments in metals, logistics, agriculture, and consumer sectors. In fiscal year 2026, further contributions will come from new subsidiaries and projects including ITC Antwerp Tank Terminals in Belgium, WS Aircraft Engine Services, Waitsia Natural Gas in Australia, Vaquero Shale Gas in the United States, Taiwan Offshore Wind Power, and Sneha Broiler Operations in India. From fiscal year 2027 onward, additional large-scale projects are expected to drive earnings, including iron ore developments in Australia, shale gas projects in the United States and Vietnam, LNG expansions in Indonesia and the UAE, renewable energy initiatives in multiple regions, low-carbon ammonia projects, and power value chain integration in the United States. Mitsui has planned a total of 2.5 trillion yen in growth investments under its medium-term management plan, with portions already executed, others before contribution to earnings, and some still in the decision or pipeline stages. Shareholder returns and its financial commitments under the current medium-term management plan. Mitsui has decided to repurchase 200 billion yen worth of its own shares, with plans to complete the buyback and cancel the shares by the end of March 2026. The dividend per share, DPS, for the fiscal year 2026 will remain at 115 yen, representing a 15 yen increase from the previous year, with 55 yen paid at the interim stage and 60 yen at year-end. Over the 3-year medium-term plan period, Mitsui expects cumulative shareholder returns through dividends and share buybacks to exceed 54% of cash flow from operating activities. The company follows a progressive dividend policy, steadily increasing dividends over time. The DPS has grown from 70 yen in fiscal year 2021 to 115 yen forecasted for fiscal year 2026, representing a compound annual growth rate of 22%. Both dividends and share repurchases have expanded significantly in recent years, reflecting Mitsui's strong financial performance and commitment to rewarding shareholders. During the previous medium-term plan, shareholder returns accounted for 34% of operating cash flow and 62% of profit. For the current plan through fiscal year 2026, Mitsui forecasts these ratios to rise to over 54% and over 57% respectively, highlighting a continued focus on delivering stable and growing returns to its shareholders. Stock price. This chart over the past year shows the stock price in Japanese yen at 3,933 as of November 5th. This chart shows the stock price in US dollars at 516.53 as of November 5. After the earnings announcement, the stock rose sharply. Today's closing price increased 4.71% from yesterday. Current PBR is 1.41 and PER is 13.8. Dividend yield is 2.92%. Compared with historical PBR, PER, and dividend yield, these figures suggest that the stock price is relatively high. Mitsui stock has also been rising like Itochu. Compared to the past, it is somewhat expensive, but it is also a good stock for long-term holding. Conclusion. Mitsui Co delivered solid results in the first half of fiscal year 2026, with both core operating cash flow and profit reaching 55% of the annual plan, leading to an upward revision of the full-year forecast. Mitsui also strengthened shareholder returns with a 200 billion yen share repurchase and 115 yen per share dividend, reflecting steady growth and a commitment to rewarding investors. Looking ahead, Mitsui expects further contributions from new projects and large-scale investments to drive sustained growth.